But I would just tell people, look, if you want to make massive money, then you need to go all in, first on you, second on your business, not on real estate or crypto. The best return in the world is your business. The best return in the world is an idea. I got an idea. I'm going to write a book. I go out and sell 1 million copies of a book. There's no better return than that.
This is Catalin, and today's interview is with Grant Cardone. For those of you that don't know Grant Cardone, he is a social media influencer, and he owns several privately held companies, a private equity real estate firm, Cardone Capital, a multifamily portfolio of assets of over 2.6 billion. I think by this time over 3 billion. Best-selling author of 11 books, 10X Rule, the 10X Movement, founder of the 10X Growth Conference. He's been featured everywhere. I mean, he is definitely on the edge when it comes to real estate, when it comes down to just developing a financially independent and a wealthy life for yourself, mainly using the vehicle of real estate, which is Grant's preferred asset class. But yeah, very interesting conversation, mostly focused around real estate and how to build a portfolio. Like a practical example, let's say you're 18, 35, in that age group, and you have $10,000, $25,000. How can you go out and invest? Grant also talked about his fund that he opened up to non-accredited investors that I think is very, very interesting. You can invest with as low as $1,000 in that. Yeah, so enjoy the conversation. Let me know what you think, and looking forward to hearing your feedback. Thank you so much. Hi, Grant. How are you? Nice to see you.
Good, my friend. Thank you for having me.
Thank you for being on too. I know you're a busy person. So I would like to take the 20 minutes we have together and really focus on a specific example. Most of our audience is 18, 35. They want to become financially independent, wealthy. Most of them have something they're doing as an active way to create income. And they're looking at the class of real estate as a way to actually grow to become independent and wealthy. So I would like, if you can, to just make a broad argument. I know you have a lot of projects going on and things that people can participate in, non-accredited investors and everything that hasn't been available in the past. But what I think would be interesting to start with is just making a broad case for why real estate and how to go about it and kind of the benefits of it.
So look, I mean, it's great that your audience knows how to go out and make money. Most people know how to make money. They know how to go out and get money. Most people are not short on that. They know how to get a little bit, at least. Some people learn how to get more than a little bit, and some people know how to go out and get a lot. Very few people, however, know how to do the second and third thing, which is how do I keep my money, not lose it? And then number 3, how do I multiply money so that it starts multiplying? Everybody's got a different way to do this. And most of us, and I'm speaking for myself here, most of my career, I was just out learning how to get it. And then one day somebody said to me, once you learn how to get money to work for you as hard as you work for it, you're actually going to you could actually create a lot of wealth for yourself. I was about 35, 36 years old, and I made a decision right there, because that really resonated with me, to learn as much about getting money to multiply for me as I had spent time and energy learning how to exchange value with my customers so they could give me more money. And I looked at stocks, gold, minerals, commodities, treasury bonds, real estate. Crypto didn't exist at that time. I would be looking at crypto had it existed back then. And I'm looking at crypto today as something that could do that. And I elected to choose real estate for a couple of reasons. And by the way, I would still do that today. If you ask me crypto or real estate, I'd be like, dude, I'm doing real estate all day long. I know some of your audience, they're like raving religious fanatics about the crypto. You can't even talk to them about anything else because they're like, oh my God, crypto is the best returns ever. I own some crypto. I probably own more crypto than 99% of your audience. But if I'm on the come up, okay, I'm trying to build something. I'm working every day and I get some money. This money comes in. The next thing I need to do with this money is protect it. So I can show, as the audience, the crypto fanatics know out there, crypto can move 80% in the wrong direction at any given time. And it has repeatedly. So if I go out and get $20,000 or 20,000 pounds, and it's my first 20,000 in savings, and my first experience in investing is with a stock 20,000 and it goes down, that it can. Lehman Brothers went to zero. General Electric, a major company on the S&P 500, it was like a $112 stock. It sat at $9 for like 8 years. So you would have literally lost most of your money for a long period of time. TV does not report about all the losses. And when they do, it's briefly, and then they move back into the victories. So if I have my 20,000 pounds, I don't want my 20,000 pounds to go to 2,000 pounds. That hurts. And it takes my attention off when I'm going back to work again. It takes my attention off. I know every day when I'm selling something or trying to build my company, I'm like, oh, I got this loss over here. Same thing with crypto. Crypto does not provide income. Stock market does not provide income. The checking accounts, you can't leave your money in a checking or savings account today. Can't leave it in the bank. The bank provides no income. So my choice was to invest in something that, number one, I could not lose my money. I would not see the big gyrations. The kind of real estate I buy, I never lose money in. I know your audience might be like, oh, you know, there's no sure thing. Oh yeah, there is. There is a piece of real estate that I invest in where 35 years I have never, ever lost money. So number one goal for me is never lose money. Number two goal is never lose money. The third goal is I get cash flow. I need cash flow. This is very, very important. So I'm out. I have one income in the beginning. And what do I need? What do I need in addition to one income? I need a second income that I ideally don't have to work for. Okay. I don't want the second income to take attention from the first income. This is where people make a big mistake. They go out and get one income. They bust in their ass to get one income. And then they go invest in a second thing, start a second company. And the second company makes the first income half the income because they don't pay attention to it anymore. I wanted my first income to grow, my second income to take zero attention from me. So what I did was I took money from the first, threw it in real estate, like I'm showing you in the back here, that's playing on my TV right now. This is a deal we're doing right now. Put the money in the real estate. I don't lose my money. I know it's not going to go down in value. It's supported by cash flow. And three, I just wait for the growth of rent. So all we buy is, and this is why I would say no to people on Bitcoin right now and Ethereum, any of the coins. Number one, you could lose your money. If you're just getting started, you don't lose money, man. Number two, you're not getting income. None of the coins pay income. Crypto does not pay income. And if you're 25, 35 years old, you need income, not just a score. Now, all that being said, how does my real estate compare to crypto or Amazon? Well, I can tell you that piece of real estate that I'm showing you right there, I'm going to pay $230 million for that. I'm going to sell it for $500 million. And I'm going to be paid to wait for 100% return on the total price. But because it's the real estate, I don't pay the whole price. I'll pay about 70 million for that property. 70 million will become 500 million, which is about a 6x return with no threat of loss, income while I wait, and great tax advantages.
So a couple questions there, because people, when they hear 200 million, they don't really resonate, though that's incredible. I think that's great. Two questions, and I know because I posted this and it was very much a patterns in questions. A lot of people, when you say like the Warren Buffett rule, like don't lose money, and second, don't lose money, that's the Warren Buffett rule. And everybody can see the success of that. But most people look, okay, like Warren Buffett is like 80 or something. I don't want to be a billionaire when I'm 80. So they look at this kind of like risk reward ratio and be like, I would rather take more risk now and get the chance to lose the money and invest it in Bitcoin or Ethereum or some other crazy thing. Would you say that is completely unadvisable, or just keep like 5-10% portfolio in crypto, which is which seems to be fine or whatever, like maybe less if you have like a big portfolio.
Yeah.
And
So this is what I would say. I would say, look, if you're going to bet on crypto, take every penny you have, all the equity you have, borrow money and go all in on crypto.
Haha.
So I would not diversify. I would strongly advise your audience to not diversify. People don't get wealthy diversifying.
They don't accumulate wealth. They may preserve it by
preserve it later.
Yeah.
Later they might do it. By the way, Warren Buffett would, if Warren Buffett could own all of Coca-Cola or AIG, which is what he started with, he would. He can't. He has, of all his investments, four represent 75% of his entire portfolio. Mark Cuban said that diversification is for idiots. Elon Musk has 3 investments in his portfolio, all of which he runs. Steve Jobs had 2 investments, Pixar and Apple. It is not true. Only the financial planner who might not even be a millionaire would suggest that you diversify, or Wall Street or the banks. A banker will tell you to diversify, but there's no banker that's got $4 billion worth of assets. So I got $4 billion worth of this real estate right here. And you know, I have $2 million worth of Bitcoin. So I only have the Bitcoin because somebody gave it to me. Okay,
that's a big gift, Grant.
yeah. Well, So I had it a little bit once I understood it, or partially understood it. But this stuff right here, look, I know that cash is garbage. Euros, pounds, pesos, whatever you want to call it, Spanish dollars, it's all garbage. It's completely made up. You know, I like the argument for crypto. I don't like the fact that when you're on the come up and you're 35 years old, what you need more than anything is income. You need a flow of income that you can depend on, so that if you're not working or can't work or something happens, you still have income to pay for your rent or pay for your food, because you still got to eat. And most people, I haven't seen anybody going to the food to the store and trading their crypto for some Whole Foods.
You mean there's no yield in crypto?
There's no yield.
Flow.
Exactly. Okay. There's no cash flow. And now, if you're a gambler, dude, and you want to put it all, I would never put it all in. Why wouldn't you? See, this is the question I ask people. Dude, if you know for sure crypto's a play, if you know it's going to the moon, the Dogecoin, if you know for sure it's going to go to 100,000, then put everything in it. But see, I'm not that sure. So because I'm not that sure, I can't make that big bet. And the way to create real wealth is to make massive bets. If particularly with your story about, hey, I don't want to wait till I'm 90 years old. And Warren, by the way, Warren started when he was 50. He didn't make any real money till he was 50 years old. But I would just tell people, look, if you want to make massive money, then you need to go all in, first on you, second on your business, not on real estate or crypto. The best return in the world is your business. The best return in the world is an idea. I got an idea. I'm going to write a book. I go out and sell 1 million copies of a book. There's no better return than that, because it came from nothing, right? It came from the mud. Now, once you got money coming in from the book sales, how do you protect the money? Okay. Well, you go all in on one stock. You could go buy Amazon today for $3,500. But I'll tell you, this piece of real estate right here will make more money for me and my family than Amazon will ever make. Because what will happen with this real estate that you can't do with Amazon and you can't do with Bitcoin, I'm going to wait 10 years on this piece of real estate. I'm going to take all my capital out of the deal. I'm going to refinance it, still own the asset, and get my down payment back. So I'll get my $70 million back, or 7 million, whatever the number is. This is a big, big deal. So it's $230 million. I could take it down to 20 million, or I could take it down to 2. It's the same math all the way across the board. It's just different zeros.
Yeah. Go for it.
No, but this asset class, this particular asset class, allows the everyday person to create wealth in a way that Wall Street has been doing for years, which is I buy an asset. It goes up in value because the income goes up without my effort. And then when it goes up in value, I refinance it, grab my initial monies out of it. Now I have that money back. It's a non-taxable event worldwide, by the way. worldwide. That becomes a non-taxable event. I refinance the property, it continues to cash flow and pay me money, but I have no money in it. This is the true wealth formula, where we're using leverage against an increased assets value going forward.
Yeah. So let me recap what I understood. Let me know if that's clear. And then I think it would be best for people in real estate to talk about some options for them to learn more. So first priority is first invest in myself, health, education, make sure I'm healthy, I'm productive, and all these things. Without that, nothing matters. Great. Second priority, active income, do a business, huge returns. And that's my active income. And then the money that I'm getting from my active income, take that, invest it into a passive choice. And you suggest go all in on something. And I'm seeing 4 criteria. Let me know if these are your criteria. So is obviously the value, the increasing value of the asset, the yield or the cash flow it generates. There's a tax component to your choices, and there's also a leverage component to your choices. Like, am I able to leverage this, get debt, do all these things?
Yeah.
So make that choice based on those 4 criteria, and you suggest going all in on one. If you want to do real estate, great, do real estate and make big bets on that. If you want to do crypto, great, do crypto. So let me know if that's
I wouldn't personally. Let's say I have $30,000 or 30,000 pounds. I'm not going to put 10 in real estate, 10 in crypto, and 10 in Amazon. The only reason you're doing that, look, if you know red's coming up, man, bet all of it on red. If you know for sure, and then the audience is like, but you can't know for sure, Grant. Okay, well then don't do it. Then because you're gambling now. See, and I don't want to gamble. Okay, I busted my ass in the marketplace gambling. Knock is a gamble. Maybe they see me, maybe they don't. Maybe they buy from me, maybe they won't. I don't know. It's a gamble. It's a gamble of my time. Once I gamble my time one time and I get some money, I don't want to gamble the bag again. So now it's like, I'm going all in. I picked real estate because I know real estate over long periods of time, sometimes even short periods of time, goes up in value. I'm not talking about houses. Okay, I'm not talking about houses. And I'm also not talking about in London, I'm not talking about the top shops that are dependent upon retail. I'm talking about where people live and how they have to pay for where they live. This planet will become a renter planet. People will rent where they live as a choice. People don't buy grocery stores. They go to the grocery store and get what they need. They don't buy hospitals. They go to the hospital, get their little thing, and leave. Okay, you don't buy a veterinarian shop, a dog store. You take your dog there, get your dog fixed, and leave. Same thing with how people live. They will live for short periods of time, 2 or 3 years in one place, and when they get tired of that place, they will take their money and their credit and move to the next place. And there's nothing wrong with that. But my investments, I could actually invest in that disruption going forward, where people your age are like, I don't want to own a home. I want to travel the world. Shit, I might want to have a home in Egypt for 2 years and then go to Dubai for 2 years and then move to the United States of America and live there for as long as my card's good for, my visa's good for.
Okay. So let's say from the audience, okay, great. Now I know that, and I want to do real estate. And there's a lot of, based on your strategy, makes a lot of sense for some people. What do you think would be, so let's say you have the 20, 30, 50, 100, 200 grand, whatever currency. Most of them are now the same, and the inflation is kind of crazy anyways. And most people know that. I think the waking up process on inflation is happening or almost done. Most people know that. And now especially it's been aggressive the last 24 months maybe. So I think people know they need to put it in something because it's going to lose value faster than you can blink. So what would you recommend some ways for people? We kind of talked about this prior. You're opening up a fund to non-accredited investors in the US. Like, tell me some options for people to look more into, and we'll get some links for them too.
Yeah. So look, it really depends on where you live, right? And it depends on your, I say where you live because not all real estate is created equal. If you're in Detroit today, you probably don't want to be in the real estate market in Detroit. If you're in Dubai, You probably don't want to be in the real estate market in Dubai right now because there's too much supply. There's tremendous amounts of vacancy. If you're in China today, you do not want to be in real estate. It's a falling knife because you don't have enough support of the renter base, of the income. The income is what determines whether real estate's worth something or not. The kind of real estate that we buy today is not based on, I need to sell you my house in order for my house to be worth something. So that means I need to be in a hot market. What I'm doing with this kind of real estate is people want to live there and they can't afford the homes in that market. So this property behind me is surrounded by $6 million homes. The person that lives in this place makes $300,000 a year. They're not qualified to buy a $6 million home. You talked about inflation. Inflation has been happening. Nobody was talking about it. Now it's on everybody's radar. But the truth is, inflation has been happening for the last 10 years, quietly, not in increased pricing, but decreased savings rates. You've been paid on $1,000, on $10,000, you basically earn $12 on your money at the bank. This is worldwide, by the way. This is not a local U.S. problem or a Europe problem. This is Japan's got the biggest problem and has for about 12 years now. So inflation doesn't just mean prices going up. It also means your money doesn't earn anything. And this is the biggest problem today. People are earning money. They have savings accounts and you're getting taxed because the banks pay you nothing. It's just an invisible kind of tax. So what we did was I created a platform, CardoneCapital.com, where the everyday investor with $1,000, with as little as $1,000, can invest in these big deals with me. So in this particular deal, I buy the deal, Catalin, with my money. I put $70 million of my money down. That would suggest to the audience that I'm convinced that I'm going to win this bet. I take a loan out for $160 million in my name. So I have put up my own cash and signed a loan for $160 million. I close the deal, and then I go to my audience on Instagram and Facebook and LinkedIn and YouTube and TikTok, et cetera, and say, hey, guys, I'm opening this trophy asset. This is a Goldman Sachs, Blackstone, best of the best piece of real estate, best location in the country, arguably the best location maybe in the United States. And I'm making it available to people that follow me. $1,000, $5,000, $10,000, $100,000, $1 million. I mean, I've had people put that amount in for this deal. The reason I'm opening this up to people is I'm disrupting the way banking works today and the way the investment game is played. In my lifetime and in your lifetime, these kind of assets have never been offered to ordinary people. There's an extraordinary real estate investment that is being offered to ordinary people. Okay. Last thing I'll say about it is I could go to one big bank. You would know the name of them. They talk about it being a rock, if you know what I mean. So they wanted to give me a loan, not a loan. They wanted to give me the loan and the equity to be a partner with me on this deal. And they said, hey, look, rather than you offering it to your, 5,000 or 6,000 investors on Instagram, why don't me and you just do the deal? I said, I don't think so. I said, I'd rather do business with my friends on Facebook and Instagram than do business with you guys and have one partner. Because it really helps people, right? It helps people to put them in the game. It's disrupting the people that have been left out of the wealth building game. The wealthy have all the money, have all the assets on this planet now. This is the kind of stuff they buy now. And I'm disrupting that game by offering this to ordinary, everyday people.
So could you, maybe in wrapping up, let's just do one more minute. Could you tell people just like some numbers or metrics that this type of investment would get them? Yeah.
So I expect this deal to pay about 5 to 6% a year in cash flow. We distribute every quarter a check to our investors every quarter. It's open to the U.S. at this time. It's not open internationally. So it should pay 5 to 6% in cash flow. I expect it to be a double, possibly a triple by the time we sell it. And the third possible exit is it's not a double or a triple. I return your capital to you. We keep the asset and it becomes an infinite return to the investor.
Wow.
Meaning I would return your $10,000 to you somewhere around the 5 or 6 year mark. I would keep you invested in the asset at the same percentage you came in at. I'd return everybody their cash. We'd keep it and you'd continue to get a check. That is the ultimate way to create wealth. And this is our ultimate target on this particular asset.
Cool. So that's CardoneCapital.com. We'll have a link for people and they can look into it. Grant, if you have one more minute, list some other ways. I know you listed some events, trainings, people like things like that for people maybe outside of the US that can't access that right now.
And hey, but you do a great job at an interview, by the way. You're offering a great service to your listeners and viewers. People and everybody watching and listening, man. Good for you that you're even interested in these topics. Hope I kept it simple enough. And but everybody should learn about real estate, right? Because real estate is a vehicle, a wealth vehicle that has been used for thousands of years successfully since the Egyptians. And whoever owned the real estate made the rules. So I'm doing an event in 30 days, less than 30 days, in December, 3 days. It's grantcardone.com/REI. I think it's $1,000 to go to this thing for 3 days virtual. You don't have to travel anywhere. If you guys want something free, I'm doing a 3-hour training. I think it's this week coming, maybe 4 or 5 days from now. grantcardone.com/REI. So if you want 3 hours, it's free. If you want 3 days, it's $1,000. And I'm going to teach you everything I'm doing in real estate. I've been buying real estate for 30 years. I've never, ever lost money on a deal. I know when I tell people that, they're like, that's impossible. I said, okay. But I'm telling you, in my case, it's true. I'm very disciplined. I have a very, very specific strategy that we employ. There's a checklist of things that we look for: the size of the deal, the market, the return, the price we can pay, the value add proposition, how much debt we can put on a deal, how we exit. We got to know how we exit when we buy it. Most people don't know that. They buy something, think they're getting a good deal, but they don't know how to get out of it. So because I'm extremely disciplined, I've never lost money in a deal. I started with $3,000. 30 years ago. It's worth $4 billion today. I don't know how many people. I'm not an old guy, I've been having fun along the way. What happened along the way is the income just kept growing. So as I get more and more income from my real estate, the real estate business got bigger and bigger. While I didn't have to pay attention to the real estate because it kept getting bigger and bigger, I was able to put all my attention on my business, myself, my family, take care of my health and my main business that would generate more money and build an audience. So grantcardone.com/REI for the free training and grantcardone.com/
We'll have the links, Grant. Don't worry.
Yeah, there you go, man. There you go.
Yeah, I don't want to stress you out with this. I'll ask Annie and she'll give me all the links. So great. Let's wrap up and I'll let you go. So Grant, thank you so much for the information. Very thoughtful. And thank you for making it simple and story-based. For everyone, I'll have links to this and you guys can look into whatever you think it's useful to you. Grant, thank you so much for your time and best of luck on making bigger deals, if that's even possible.
Let's go, man. Let's go.
So
I'm going to 40 billion. So you guys can, even if you don't do anything, just keep watching what I'm doing because I'm going to 40 billion. Next time we talk, I'll be at 10, then we're going to 40.
Okay, I'll talk to you in 6 months.
Let's go. Thank you, Catalin. Great job, man.
Thank you. Bye-bye.